Yes, we actually use the volatility to our advantage. We are what is called a liquidity provider. So when our stocks get hit hard, or stocks that we're interested in get hit hard, and our research is pointing toward them as primary beneficiaries of, the way the world's going to transform, we will buy.
Hello, everyone, and welcome to a very special edition of our interview series, Conversations with Leaders. Today, we are diving deep into the world of innovation and disruptive technologies with none other than Cathie Wood, CEO of ARK Invest, and CEO Yoni Assia of eToro. With ARK's groundbreaking ETFs now available for trading on eToro, we're exploring what's next in the world of future tech, investing, and more. Stay tuned for an exciting conversation on where the markets and technology are headed. First of all, Cathie, how are you? It's great to have you with us here today.
Thank you, Sam. I'm very happy to be with you. And
Fantastic.
Yoni.
And yeah, Yoni also, it's great to have you with us. How are you?
Super excited being here with Cathie.
Yeah. And myself, of course.
Of course.
Well, look, Cathie, first question will come to you. Obviously, you're widely recognized for your work with ARK Invest. Many, however, might not be too familiar with your personal journey. Could you share a little bit about your background and the path that led you to where you are here today?
Yes, thank you, Sam. Well, I've been in the business for a very long time. I actually started in New York City in the early 80s. So I saw the market evolve from completely active, meaning no passive strategies back then, to the tech and telecom bubble. And then we went into a 20-year period, first with the tech and telecom bust, and then the 08, 09 meltdown, where there was a big shift towards passive. So why did I start ARK in 2014, 10 years ago? I started it to really go back to the future, because I think now that the market has become so concentrated into so few stocks, that we're going to see a broadening out of the market as interest rates come down. Now, 10 years ago, I would have said the same thing. We saw concentration, but in the last 6 months, it has reached an extreme that we have never seen before. And so it's unlikely to continue to concentrate into just a few stocks. And the broadening out process should be great for our strategy, which is the closest you'll find to a venture capital firm in the public equity markets. We're really trying to find those companies and stocks that are going to populate the indexes in the future. We're just trying to find them early. And we give our research away because we think this part of the market is so inefficiently priced. Uh, and we want people to understand how provocatively the world is changing, how 5 innovation platforms, so robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the life science space, uh, are going to transform the world completely, because these platforms are converging. And we've set up our research team to follow technologies, not sectors, because we think that's the way the world's going to evolve. The lines between and among sectors are going to blur because of technology. So we think the opportunities are immense, and we want to provide a differentiated exposure to innovation.
Thank you, Cathie. I mean, it's an exciting space right now. And something else I think, Yoni, by the way, which I think is pretty exciting, and some of our listeners and watchers right now might already know this, but we've recently at eToro launched the ARK Future First Smart Portfolio. in collaboration with Cathie and ARK Invest, which gives our customers direct access to one of the world's leading innovation investors. Yoni, how significant was this collaboration for you, and what similarities do you see with eToro and ARK?
So we're super excited about launching this partnership with ARK. I've been personally a very big fan of Cathie and ARK for a very long period of time. At eToro, we've always had commitment to innovation and disruptive technology and the democratization of both technology in the world of finance and investing, and I think that aligns perfectly with ARK's investment philosophy. I think on eToro, we've always wanted to democratize the access to great investors and to great investing. And in this case, now people can actually invest in multiple ETFs by ARK in one click of a button, and I'm excited about this journey.
Yeah, absolutely. And of course, that's available for anyone on the eToro platform. You can check that out, of course. And any questions, feel free to
Sam,
put them below.
if I could just add, I met Yoni, I'm going to say 7 years ago, Yoni, or thereabouts. And his excitement about innovation was infectious. And so when we, after buying a small company in London, learned that we could work with eToro in this way, we were just thrilled.
Amazing. Great to hear that. Yeah, I mean, 7 years ago, I mean, time has flied since then, hasn't it? And you know, it's probably a more interesting space in the market right now than it was then, but this is great. Cathie, back to you. Your investment strategy heavily focused on disruptive innovation. How do you differentiate between short-term market volatility, which we see, of course, but also then the long-term value creation?
Yes, we actually use the volatility to our advantage. We are what is called a liquidity provider. So when our stocks get hit hard, or stocks that we're interested in get hit hard, and our research is pointing toward them as primary beneficiaries of, the way the world's going to transform, we will buy. And when, on the other hand, the market gets really excited about some of our stocks, we will sell, even though. And what I mean by that, this is just trimming around the edges. I'll give you an example. Tesla is our largest position, and as a firm, and we have, when it got down to 100, 150 in the last couple of years, we were
Mhm.
buying aggressively. As it has scaled up to roughly 250, we'll take some profits. Now, why do we do that? We do it because disruptive innovation is controversial, and so we know the stocks are going to be volatile. And over the years, we've been able to add to our performance by trimming when stocks are really scaling at a very rapid rate, and by buying when they are falling. So, buy low, sell high. But we really do that just at the margin because we are a high conviction manager. So you're not going to see us flipping in and out of stocks. We have right now uh, um, an, a portfolio that has been fairly concentrated. And so our conviction is very high as we wait for lower interest rates and a broadening out of the market to take our highest conviction names higher.
Fantastic. Cathie, can I just ask you a quick sort of follow-up question? And I think a lot of newer traders and investors will be in this bracket, which I'm about to describe, where a certain stock in someone's portfolio is doing really well or really badly. They're checking it constantly throughout the day, multiple times. Are you like this, or are you more just, okay, I'm going to step back? It is what it is. Our valuation metrics are what they are, and that's what we're going to focus on.
Well, what we do is ask our trading team to send alerts when there are big moves one way or the other, and then we will address them, see if the moves are big enough to make a trade, just a tactical trade. But for the most part, we hold our stocks for the long term using volatility to trade around the margin, as I mentioned.
Yeah, absolutely. I think there's a lesson in there for all those newer traders and investors out there. Have patience. Yoni, let's come back to you. And, as someone who leads a platform in eToro that focuses on innovation, eToro's most disruptive products are the popular investor program and smart portfolios. Could you share a little bit more about this program and also your vision for its future?
Sure. So since I started investing in the market when I was 13, I quickly realized I can't really understand trading and investing across all industries, all geographies. I actually personally share very much Cathie's and ARK's conviction on technology and disruption, but I wanted to be able to invest personally and to build a platform that enable democratization of finance, so having more people having access to more opportunities from different types. Our popular investors today, 3,200 amazing investors that generate consistent returns. Each and one of them have a different strategy, different view of the markets, and I've always been a big fan of really the great asset managers, the great investors, such an ARK, and it's great to be able to partner with them and to bring them into smart portfolios who capture basically those professional strategies as well. And we'll continue to partner and bring those opportunities to our customers from all around the world, from Europe and the UK to Asia and America through our platform.
Amazing. Cathie, Yoni talks about investing as early as 13 there. Was it a similar age for you? You were in your teenage years?
Um, Actually, I cannot say that it was. I was introduced to the business uh, in college by an economist who became very famous. His name is Art Laffer, famous for the Laffer curve. And he introduced me to a company on the West Coast in Los Angeles called Capital Group. And I walked in the first day to Capital Group, and within the first week, I was put on a team that was exploring. Now, this was way back in the late 70s, actually, while I was still in college. They were exploring in 1977 how Hong Kong was going to change in 1997. That was the changeover, right? The turnover. So that was 20 years, and I marveled. I thought, wow, they're paying me to learn. I'm so excited. And, I've always felt this business that, is a fantastic business because the world is our oyster, and really trying to put the puzzle together, figure out the way it's going to work, is pretty exciting.
Yeah, there's
Which,
nothing
but
like.
by the way, Capital Group today manages over, I think, $2 trillion.
Yes.
For listeners' perspective, it's always interesting to learn from those very, very large asset managers how they research the entire world.
Yes, yes. And I feel privileged to have trained there because I believe what we're doing now at ARK with truly active management, research focused on names that are not in the broad-based indexes. A lot of asset management firms don't want to go there. It doesn't feel like safe terrain, but from our point of view, given how rapidly the world is changing, that I think that we're going to be in the safer place a longer run, because we founded the firm to figure out how the world is going to change and to get on the right side of change.
Yeah, absolutely. I don't think we can do this interview without talking about Elon Musk. And Elon, if you're watching, hello. I look forward to having you on here one day. Cathie, you've been a vocal supporter of Elon and his vision. What is it
Yes.
about Elon Musk and his leadership that makes you confident in his ability to drive innovation, especially through the companies like Tesla and SpaceX?
Yes, I think Elon understands that these technologies are converging. So he is creating huge businesses. So just to give you the example on Tesla, it's the easy one. I gave you the 5 platforms around which we have centered our investing and our research. Tesla is the convergence of 3 of them. Robotics, autonomous vehicles are robots. And I consider my Model 3 and my Model Y to be early stage robots. So autonomous vehicles are robots. They will be electric and they'll be powered by AI. And we do believe that the autonomous taxi platform opportunity is going to be one of the largest in terms of scaling during the next 5 to 10 years. So we think Tesla will own one of those platforms thanks to Elon's understanding of this convergence. And we think that platform or the platform providers around the world will generate $4 to $5 trillion in revenue from essentially nothing now in the next 5 to 10 years. And it's going to be winner take most. Elon understands that. He understands it in the autonomous vehicle world. He understands it in space. He understands it in large language models in the private sector. So XAI and even X itself, formerly Twitter, is going to be a source of great content for his models, for his large language models, as will the content coming out of Tesla. All of those real world driving miles, that's data that he can push through the large language model. So he'll have more differentiated kinds of data, space, autonomous vehicles, Neuralink, so the genomic or multiomics data, than I think anyone else in the world. So many people think, oh my gosh, he is spreading himself way too thin. Absolutely not. He is masterminding one of the most important strategies, certainly in the AI age, and is going to build, we think, 5 or 6 of the largest and most important companies in the world.
Absolutely. And I think after, just mentioning everything there about Elon and speaking so well of him, he's got to come on the podcast now to talk about it all and, return the favor. Cathie, just
make sure you invite me as well, like with Cathie.
Yes, we need to see this. Cathie, just sort of following up on the Tesla chat there. I mean, you mentioned a lot about it just then, but also before. Can you give a glimpse into sort of how you would value Tesla, and does that change, if as a period of drawdown for a while you still sort of have the same value? If it's up at all-time highs, does that change? How do you kind of go about valuing it?
Yes, we publish our model. So if anyone wants to see how we model and the detailed way in which we model, you can go to our website, ark-invest.com, and find the blog and the model, or you can go to GitHub. We put our model on GitHub. This one we feel is highly misunderstood. Many people value it as an EV manufacturer because they really can't get their arms around autonomous. Why is that? It's the way they've set up their research departments. They've got their auto analysts following Tesla. We don't have an auto analyst following Tesla. We have 3 analysts following Tesla: a robotics, energy storage, and artificial intelligence analyst. And actually a 4th one, Tasha Keeney, pulling it all together in the autonomous model. And so if you look at the model, you'll see that Tesla is moving from an EV model where the gross margins are right now, they range in the 15-16% range for the auto EV sector. And we think they'll take those margins to the 30% range. But what autonomous is going to do is turn Tesla into a software as a service company. Software as a service companies have 80% plus gross margins. And we think that the inefficiency in the market, while Tesla is not priced purely like an EV manufacturer now, it's more richly priced. It is not priced like a software as a service provider. And you'll see in our model how we transition from EVs now dominating the model to the autonomous platform dominating in 2029. And we think autonomous will account for 90% of its valuation at that time. So looking at it as an EV company only misses where the valuation is going. It's a little bit like an analogy would be in the early days, many people thought Amazon was just a retail provider, and they had no idea. They didn't know what to do with Amazon Web Services. Now the cloud is the most highly valued part of Amazon. It's one of the most important cloud providers. And yet I think there's still a lot of retail analysts following it. It should be technology analysts, certainly those focused on cloud and AI.
Yeah, absolutely. And actually, it's worth mentioning just on Amazon, there's been multiple times, hasn't there, over the last couple of decades where it's dropped 10, 20, 30% at a
Oh,
time. And that goes
yes,
back to the sort of have patience, think long term, right?
absolutely. That is absolutely right. Now, I will say, um, the interest rate environment in the last few years was very tough for innovation-based strategies.
Hmm.
Um, those are coming down now, but what we've seen develop over the last few years is a nice long base in some of our innovation strategies. And in our world, or in the trading world, I should say, the longer the base, the bigger the breakout. And we do think, in fact, if you exclude the boom and bust in innovation strategies during the tech and telecom bubble, you'll see that the base goes all the way back now to 2018. That's a very long base. So we're looking forward to a number of good years ahead as rates come down and the markets broaden out.
Yeah, absolutely. Bring it on. Yoni, let's talk also
Yeah.
about Elon Musk. You've also expressed strong support for him, particularly with your belief with the X platform, obviously formerly Twitter, where users can now trade exclusively with the cash tag. What is it about Elon that resonates with you most and helps shapes your views there?
I think for me, as I'm a big fan of great investors, as a founder CEO, I'm also a great fan of founder CEOs, visionary CEOs. And I think what, for myself, both as a founder CEO, Elon proved again and again, is his ability to push the boundaries of what's possible. This sort of and that's also why I quote him internally sometimes. So I say, at one point, eToro grows from 12 billion of assets under administration to $1 trillion. People used to tell me, I'm crazy of saying it. Maybe it's 2040, maybe it's 2050. And then I tell them, but Elon started a company saying they're going to Mars. They're going to man Mars, and it works for him. So it's okay to be, to really be visionary, to take a very long-term view of the future and look at how what you're building sort of racks up along that side. And that's why I'm also a big believer with X. We've been working with Twitter for at least 12 years. We've increased and scaled our partnership now with X. I think also, and just as a disclaimer, a very small investor in X.ai, but I think at some point X.ai, which is generally a competitor of OpenAI, merges with X to build a platform eventually that's similar in potential size and scale as Google and Facebook. So I think that's really the opportunity of what I'm seeing at X, is the combination of a huge, massive amount of daily active users and monthly active users that are there for real-time news, whether it's on finance or on sports, on everything. And that amount of data is what eventually powers AI, right? So AI has to continuously get that feed of data to get smarter, in the combination of such a large data platform with one of the most advanced AI platforms in the world, I think has an opportunity to eventually compete with the large tech companies. And of course, I share very much Cathie's and ARK's view. Tesla is also my largest single stock holding on the platform. So again, other than a lot of controversies around Elon, I think as a founder, visionary, CEO, and running the companies, I think it's quite amazing to see it and to figure out how to replicate it, maybe for myself with less controversial impact.
Yeah,
Yeah,
absolutely.
a lot of people ask me about that point, Yoni, uh, the controversies around Elon. Um, what we do to understand whether or not he's on the right track is we keep focused on the technologies and how he's driving them. He epitomizes our belief that technologies and understands that technologies are writing down learning curves. He figures out, he does a lot of first principles research. He does not depend on how on listening to and learning how things have been done. He's creating new ways of doing things, and using the learning curves and cost declines that learning curves present in technology to drive new ways of doing things. Uh, that is his mindset. So he's all about the future, not about the past. And we just focus on, is he creating moats or barriers to entry with his technologies? And he is.
I completely agree. And another note is a lot of the great leaders in tech, a lot of people who are focused more in the future, including investors, whether it's Masa from SoftBank or whether it's Larry Ellison and Steve Jobs, a lot of the great investors in the future and the great builders of the future, usually a lot of people call them crazy. So I don't think that's so unique, and sometimes is even a good sign of somebody who's trying to break those barriers.
Yeah, absolutely. Just while you both talk there about CEOs and leaders, and same question for both of you. Cathie, you can go first on this one. How important is it to be in the room with others, take inspiration from what they do? You don't obviously have to agree with everything they say, but how important is it to get all these different, angles of what people are thinking?
You mean inside a company, listening to the people around you?
Yeah, yeah, absolutely. Yeah.
Yes. Yeah, I think, well, in terms of a visionary leader, uh, he's on a mission, and everyone knows the mission. He's creating some of the hardest projects in the world for engineers to evolve, and so he has to surround himself by really smart people,
Mm.
not only engineers but also business people. And sure, that he has a very strong point of view, but I know he respects people. And in fact, he's even said it when we did our podcast with him. Uh, right after it, he said, one of the most important things that you can do for Tesla and for me is to tell me when you think I'm going wrong. Now, he said that to us as investors. He said you have to have a strong point of view in order to tell Elon he is wrong. And he knows we have a strong point of view. We do our research, and we understand the competitive dynamics as well. So we do have knowledge that he may not have. And, that gives you a sense of the
Mm.
type of person that he is. He does not suffer fools, though. If he does not respect people, they know so and they're out pretty quickly.
And Yoni, I guess from an eToro point of view, and being the CEO, do you find it useful speaking to other CEOs to get their point of views on all different types of things?
Always. I love speaking where I always say I love speaking with smart people, especially with smart people who need to tackle the same problems I need to do. In a lot of cases, founder CEOs tackle the same issues, and it's great to hear their perspective. Sometimes, it's the right thing for us, sometimes it's not. And the same thing about great investors. I think as an investment platform, we need to hear out the best investors in the world, their views, and I constantly learn from them about how the way I invest personally as well on the eToro platform.
Thank you. Cathie, next question. With ARK's focus on future technologies like AI, genomics, and blockchain, how do you assess their timelines and market potential, particularly regarding crypto allocations? Given the ups and downs, how do you maintain this conviction in your strategy? And what would you say to investors questioning ARK's approach after, a challenging period?
Yes. Well, our research, we just talked about Elon and his first principles approach, white sheet of paper. I'm not going to look at how things have been done. How will they be done?
Hmm.
ARK does the same thing. We have centered our research around something called Wright's Law. Now, Wright's Law is a relative of Moore's Law. So Moore's Law, many people know from the semiconductor space. The difference is Moore's Law is a function of time. It basically says twice the power at the same cost every 18 months to 2 years. So it's a function of time. Wright's Law is not a function of time. It's a function of units. And it basically says for every cumulative doubling uh, in the number of units produced, so cumulative doubling, 1 to 2, 2 to 4, 4 to 8, for every cumulative doubling in the number of units produced with a new technology or of a new technology, costs will decline at a consistent percentage rate. And we have calculated that for each of the major technologies on our platform. Electric drivetrains, for example, the costs go down 28% for every cumulative doubling. Industrial robots, the costs go down 50% for every cumulative doubling. AI, if you include both software and hardware, costs go down 48% for every cumulative doubling. Now, the cumulative doubling, the metric is data per unit of computing power. So the cumulative doubling is taking place in less than a year's time, which is shocking. This has never happened before. So AI training costs are dropping 70% per year. AI inference costs are dropping 85% plus per year. So we're following that cost curve and we're saying, okay, as costs fall, unit growth is going to kick in. And, it's interesting that we are seeing this happen, and especially, believe it or not, in the healthcare space, in the multi-omics or genomic space, we're beginning to see the convergence of sequencing and artificial intelligence and CRISPR gene editing cure disease. And one of the stocks in our portfolio, genomics portfolio, and the flagship overall portfolio is CRISPR Therapeutics. CRISPR Therapeutics is curing diseases. Its stock has dropped just since February from $90 to $45. Why has that happened? Why has that happened? Oh, the reimbursement takes place after the gene, the body is edited. The genes are edited after the cells, which are taken out of the body, are put back in. The delay is 2 to 3 months. That is why the stock went down. That's crazy. That's what we've been through in this algorithmically driven market where the companies that are not generating a lot of cash flow, anything that goes wrong, and it's not that it went wrong, it's just taking a little longer for the cells to essentially culture with this gene editing technique. But it works, and it has been approved, and it's going to be reimbursed. But the markets have been in this interest rate higher for longer funk. We believe that is now starting to change. So I think that for those who are skeptical of what we're saying, I would suggest they read our research, go to our website. We give it away, see how much is changing and how little their portfolios might be exposed to what we are researching and investing in. Because if if we are right, then they are probably short truly disruptive innovation. Sure, they have a lot of innovation with the usual suspects in the broad-based benchmarks, but they are lacking the companies that are going to be much more transformational than those in the broad-based benchmarks.
Yeah, and actually, just for anyone watching on YouTube right now, I'm pointing below because that's where all the links will be that Cathie has mentioned, and also on the podcast. If you're listening, go check the bio, and you'll be able to find those as well. Cathie, just a quick question. We've got time for a few more. Would you say it's the most interesting time to be an investor right now that you've seen in your career?
Yes, and it's the most interesting time. And psychologically, behavioral science is going to write books about what's going on. If you look at the period from the early 80s to the tech and telecom bubble, that is when all the seeds for what is happening today were planted. They were planted back then. And everybody, investors went crazy in the late 90s. They just threw money at the seeds. The seeds were nowhere ready to germinate, but they threw money, and that ended badly. Today, what is happening? Here, the seeds have been germinating for 25, 30 years, and now they are flourishing. And yet, investors are fearful and they're hugging their benchmarks really closely. When it's all happening now, we are ready for prime time. I think these stocks are going to be rewarded. Truth will win out. They're going to be incredibly profitable with time. They're still in the investment stage now. But I think that those who avoid these stocks, that will end badly as well.
Yoni, I mean, look,
I'm actually convinced I'm going to read the research now on genomics and healthcare. It's a part of my investment portfolio. I'm actually underinvested in, and it makes a lot of sense. I've looked at a lot of these companies. They're extremely undervalued. A lot of them even under cash. I just have no idea how do you select in that business because I don't understand that business. So I'll go into the research, and you have at least one more investor from this podcast.
Yes, and I will say what we need to understand what's going on in this what we call multi-omics world. It's very complicated. It's DNA, RNA, proteins, methylation, epigenetics. It's very complicated. We have PhDs. We have 2 PhDs full-time on it. And then we brought in a founder of a company that is exploiting the convergence between sequencing technologies and artificial intelligence to create molecular diagnostic tests that identify cancer in stage 1 or before stage 1, when the body is setting up for the cancer. So we've got incredible expertise, and you absolutely do need it in this space in order to select the right stocks.
A fascinating area in the market. Yoni, same sort of question to you. I mean, look, investing at 13, 14 years old is probably as exciting as it gets, but from the broader space, do you think it is, for like a retail investor right now, is just the most interesting point you've seen in your career?
Well, I started during the dot-com bubble. That was definitely interesting times. I think just, again, the opportunities out there, but also the access to different strategies, to different investors, to be able to, on the internet as a retail investor, listen to a podcast like this or listen to Elon and Cathie talk about Tesla. I think that's very unique to where we are today. I think the rise of retail investors and their influence on the markets actually correct a lot of the things that Cathie's talking about, because retail investors do have sort of a more, I'd say, visionary approach to investing when they invest in something because they're sort of committed to the idea of what the company does, whether they like their products or whether it's not about financials, right? So the problem is Wall Street looks at financials and, eventually it almost can sort of disregard the product or the vision of a company, where retail investors are really investing in the product and vision of the company before the numbers. Sometimes they might not have the expertise to do advanced things like trimming on the top, so they'll just hold it for longer. But I think bringing in more retail investors from all around the world to invest in companies that they believe in changes that paradigm, and we'll continue to see the rise of retail investors, and we're super excited about the interest rates going down. I think that's going to release a lot of dry powder exactly to what's not in the S&P 500. The S&P 500 sort of is an easy investment to do, but when interest rates go down, when there is no risk-free 5%, and you have to do the effort to invest in other parts of the market, I think that will unleash a lot of great opportunities, and definitely, personally very big believer in all of the segments that the ARKs are researching and investing in.
Yeah, very interesting
Yoni,
time.
oh, sorry, Sam. It's interesting. Two of the most important AI companies out there, and I put Tesla into AI, but also Palantir. If you listen to Elon Musk or Alex Karp, the CEOs, they will echo what you are saying. They actually prefer and give more airtime, it seems to me, to retail investors, because retail investors are doing some of the work that institutional investors are not. To your point, Yoni, they actually were driving in a Tesla before many institutional investors got into a Tesla. Some of them are passionate about national security and learned about Palantir that way. So you're absolutely right. The numbers do have to pull through ultimately, but in the short term, these companies are investing aggressively to capitalize on massive opportunities. And if they've done the right thing in terms of investing, put it in the right places, invested enough, they're probably going to be much bigger winners than the institutional investor world believes, now that it has become so short-term in its focus.
I think, again, exactly that short-term versus long-term, I think retail investors simply have, almost by definition, more appetite to risk and to long-term results of their investments, because they're managing their own money, right? So they have that ability to take that risk sometimes, which is much more forward-looking than institutional investors. And I think over time that shifts the entire market, right? So visionary companies will look more into retail investors, which is exactly what we're excited about, as well as the best retail investors becoming popular investors in eToro.
And Yoni, what's been the biggest shift that you have seen with those retail investors? Of course, on eToro, right, there's 35 million registered, which is incredible. And I think that speaks volumes. And obviously you've got access to data that not many have. So what have you sort of seen the biggest shift?
I think, first of all, we've seen a lot of what you read in the books and behavioral economics very much true about retail investors. So we have seen a lot of the retail investors as a whole sort of following trends. But we're also very big believers in those trends. Bitcoin, we've seen the rise of Bitcoin, and with it sort of the rise of eToro in 2017, then 2021. Tesla was the most popular stock. Now, actually, suddenly NVIDIA is the most popular stock. So I think they're catching on the right trends. And what we see over time is they're getting smarter, right? Which is very interesting to see that people actually have better performance. Well, maybe it's basic or logical, right? But we see people joining eToro and their performance in the first year, then second year, their third year. And what you see is over time, they're actually decreasing their risk and improving their performance over time, which makes a lot of sense because a lot of retail investors jump into the market to buy things like maybe it's Bitcoin or Tesla, or maybe it's even something like Doge. But as they learn about the market, as they're exposed into more content, they're becoming much smarter and they can learn from one another on the platform. And it's interesting to see that, by the way, even when we look at our employees, eTorians, you see people improving reducing risk and improving their performance over time after years at eToro. So it's excited to see how retail investors or Gen Y investors are maturing in how they invest.
Yeah, experience is key. Cathie, I'm just following up on that, and we'll make this the last question just on today, focusing on retail.
I'll have one more question because we actually skipped something which I wanted to ask.
Yes,
which
go.
is,
Yes.
I know you're a big fan of Bitcoin. It's actually I said Tesla's my biggest single stock, but my two largest position in my portfolio, by the way, which is a public portfolio. So all of the listeners are welcome to go and see my portfolio on eToro, are Bitcoin and Ethereum. So I know we know the view of ARK on Bitcoin. What's your view on all of the rest? And are you actually looking at sort of the tail beyond sort of Bitcoin and Ethereum? Are you looking at sort of the tail of the other, let's say, 100 crypto assets that are probably trading on eToro?
Yes, we are. We've written a lot about Bitcoin, as you say, and we do believe Bitcoin is the biggest of all of the ideas. But we also believe that DeFi, which I don't know if you've heard this word before, but I think it captures better what the movement is. And I heard it from an Indian woman investor. It's Finternet. Finternet. Isn't that doesn't
I
that
like
say
it.
it? I do too. I do too. I think the founder of Infosys coined it. So we think that's a very big idea. And so we're doing, I think either we've just put out a paper or about to put out a paper on Ether and how important it is to the Finternet movement that we used to call DeFi or decentralized financial services. So we think, yes, that's a revolution for financial services. And Ether dominates. We know that Solana is very strong. We are also invested in layer twos, and so optimism and so forth. And we're about to put out, in fact, we're about to put out another paper about the 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 assets, the crypto assets that, or digital assets that we think are going to be the big winners. So I can't talk about it now, but stay tuned. Yes, and we have some strategies with these assets in them, but they're on the private side. So, but we want to share our research in that realm as well, because
By the way, we can open also an ARK digital assets
Yes.
portfolio on eToro as well. So we're not limited only by listed instruments on eToro. We'll follow up. We'll definitely
oh, yeah,
follow up
let's
on
follow up
that.
on
That's the
that.
fun part of an eToro. We can actually create things that we're happy to work. Also, we're working on a founder mode smart portfolio. Maybe we can do that with ARK as well.
Yeah, yeah. Well, we have four analysts and strategists on the digital asset space. So we do think it's going to be big. We know, I mean, I heard some crazy number there. Are there 40,000 assets? It used to be 10,000 crypto assets. Most of them will die. But there are going to be, we don't know if it's, 20 or 100. Because we don't, we're watching how this world is evolving, and there are more specialized roles that are very interesting. So I think stay tuned for our paper, and yeah, we'd love to engage with you and talk about what would be possible in the digital asset space.
Yeah, absolutely. And look, final question. I mean, look, retail investors are, you know, for the most part, big fans of crypto as well. So, Cappy, what is your view on the role of retail investors in today's market, not just crypto, but the whole thing? And what inspired you to initiate this collaboration with eToro?
Well, I think well, first of all, for 10 years we have been focused on the retail investor in the U.S. and we do have institutional clients as well, but it is the retail investor who, as Yoni said, they have the latitude and I would say the intellectual, joy of discovering, the new and wanting to be a part of it and making it happen. So I think that's one of the biggest reasons. That's we've our respect for retail investors has grown enormously. I've had lots of experience with retail investors, but now that the internet makes information ubiquitous, and now that companies like ARK give their research away to help retail investors orient their portfolios, we get so much back in terms of,
Yeah.
of course, assets under management, but even more than that, we've had retail investors start YouTube channels about how we're trading, since we post our trades every day. And so they helped they helped ARK become a global brand. It's unbelievable. We're just about 60 people, but we do have a global brand. And one of the reasons we are so small is we have outsourced distribution to companies like eToro. That's been a very important part of our growth story. So we do what we specialize in, and distribution is not our core competency. eToro does an amazing job at distribution.
Retail investors, we've got the seal of approval, so give yourselves all a clap there, a round of applause. Cathie and Yoni, thank you so much for joining us today. It's been an absolute pleasure to have you both on. Thank you so much.
Thank you very much, Cathie. Real pleasure.
Pleasure, Yoni. Great to see you again. And thank you, Sam, for hosting. Thank you for doing the great research on ARK. And we're just delighted to be partners with eToro.
Thank you both.